Hello, 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 everybody. This is an exciting video today because it's going to be about a stock that is near and dear to my heart, and that is Palantir. I won't get into the reasons why I like it so much, but I am a trader, and with my trading hat on today, I made a certain made a certain play that we're going to go over today. And I'm going to tell you the many routes that it can go. I'm really excited about this play. Now, this is not your typical options play because this is a credit spread. And although I am bullish, if you're unaware about what a credit spread is, I'm basically getting paid to sell an option spread on Palantir, and I will make money if Palantir does not go down a certain amount, right? That's why options are so great, because just like the way, if you saw my other video, the way I was bearish on the market is I sold a call credit spread. It's called a bear call spread, right? And that's just me dipping my toes into the bearish part of the market, where I'm not shorting the market necessarily, but I am saying I don't think it's going to get to a certain level by a certain date. This play is similar but bullish, where I am selling a out of the money credit spread on Palantir at $15. You'll see, I'll go over it. And as long as Palantir doesn't drop below $15 on expiration day, I make money. We're going to go over how much money I make, what's the return on capital, or risk, I should say, and all of that right now. This is a really good video for people who like Palantir and who like options or want to learn options, because this will really make you think, and it'll show you why options are so great. So let me show my share my screen. All right. So this is the play. Actually, let's make it full screen. Okay, so this is the play right here, and what this is called on C, I use Thinkorswim, and when it fills, it is called a vertical credit spread. All right, and so this is telling you that I received $1.50 per share of credit, and I sold 50 contracts and bought 50 contracts. So I sold the $15 put, right? And I bought the $10 put. So that's a $5 spread. 10 to $5 is a $5. Excuse me, 15 to $10 is a $5 spread. So the spread is $5, and I got paid $1.50 of that spread, right? So as you can see here, right, if we fast forward to the 600 and something days that this is, because it expires on January 16th, 2026, the most that I can possibly make is $7,500. The most that I can possibly lose is $17,500. So if you were buying shares, you can look at it like this. You spend $17,500 to buy shares, right? And if you're buying shares of a biotech or speculative stock, you know, the risk of going to zero is pretty is real, right? And options, since they have an expiration day, you must also understand that the risk of losing everything or all of your capital, the risk of your capital, is also real. In this case, my total maximum risk is $17,500. Now, if we look into it deeper, what you see is that I have a maximum return on risk of about 43%. That means for me putting $17,500 of my money out there that can be lost, I am willing to lose it, right? But if I'm right on this play, which this play actually has a high probability of me being right, is I get $7,500, which is 43% return on risk. Okay, that's how I want you to look at it. Now, this probability of profit, right? This is basically saying there's a 70% chance that I will make at least $1, right? So this is not a 70% chance that I'll make $7,500. There's a 70% chance that I'll make at least $1. But this is called the OTM probability, or out of the money probability, because I am the seller, the net seller of these contracts. So I want them to stay out of the money, because if they expire like this, they will expire worthless to whoever bought them, and then I will get 100% of the profit if Palantir on January 16, 2026 is at or above $15 a share. Now, before we look at the chart and why I did this, another beautiful thing about this is that it has a 33% cushion. That means that Palantir has to go down from its current price 33% for me to start losing money, right? So again, this type of option play, which is a credit spread, and it's a long-term credit spread, right? It expires in a little bit less than 2 years. Is a risk-defined play, and I'm telling you right here what my max gain is. It's 43%. So this is similar to me telling you that if you put $100,000 into QQQ, in 2 years, you would have $143,000, because that would mean that QQQ went up 43% from when you bought it, right? This is the same thing, just worked a little bit different. My max return on risk is 43%. Now, with that said, right, we're going to go ahead and also I want to show you guys the chart, because what I want to illuminate before I get started is, believe it or not, even though it's 50 contracts and that's a lot, this is actually only a quarter of the amount of money over the next certain amount of months, depending on what happens, of how much I'm willing to put into this play. Right? So right now, the amount of cash that I need to do this play is $17,500, because it's cash secured. You need to be able, your broker, if you have a cash account, will not let you do this play unless you have $17,500, right? Just like if you buy shares, you have to have the money to buy shares. So this is actually 25% of what I'm willing to go into. There's still, I will still do it 3 more times, 3 plays with 25% each time, if the stock falls. If the stock goes neutral or rises, I'm not doing anything. But if it falls to certain price points, I will keep on loading up, and the premium I will receive will actually be more than 150. So it's kind of like saying I will be averaging into my total position, and then the goal is to have basically an average credit of $2.50 to $3, which means that it would be a 50-50. Now it's going to take more money, but we'll talk about that in a second. So this is the chart for Palantir, right? And in my opinion, it is definitely in a head and shoulders, right? And a head and shoulders doesn't mean that it's going down forever or anything like that. A head and shoulders is bearish, but it's not 100%. And where we're at right now is basically the neckline of the head and shoulders, which is why I decided to enter today. Because if the head and shoulders is going to happen, it's going to happen soon, which means it's going to go down a certain percent. But I am very bullish on Palantir. So if it does happen, I'm going to add 50 more contracts to my spread and get even more premium, right? And if it doesn't happen, well, then it doesn't happen, and I'm good. So either way, I'm happy. Now, I do believe that the worst case scenario, in my opinion, I have 2 worst case scenarios. So in my opinion, this level right here, right, the 78.6 is the absolute lowest that Palantir can drop to. That is like absolute lowest, right? So if we were to go down, Palantir will have to drop 53% to get to this Fibonacci retracement level, which there are three main reversal levels in Fibonacci retracement. Okay, there is 38.2, which we're at, or excuse me, this over here, which I believe is where it can fall to, is the most likely. If it falls, that's where I believe it'll fall to. 50 and 61.8. Sometimes, on worst case scenarios, 78.6 is reached. I don't think it's going to be reached. I think most likely is it'll fall down to around 19 bucks, and then it's going to have to break this support line, and then go down to the 50% fib level, which is around 1650. And then if it breaks these two, then big money will start coming in at around 14. But remember, another thing is Palantir is going to get into the S&P 500. It's not if, it's when. So I am not betting against Palantir. I am only adding shares in my IRA, or with my trading hat on, I am trading these kinds of plays that will pay me to be bullish. And this play is so great because you don't make money if it goes up. You make money if it doesn't go down. So now to show you where it can go down and I still make money is right here. Look at that. It's right here. It's above, it's below the 50% fib level, but above the 61.8. But that's where I saw that the numbers were the best for the play. Now, can it drop that low? Yes. Will it? I don't think it will. I really don't think it will. Now, this is not investment advice or anything, but these are my thoughts, technical on Palantir. Now, I will say I am biased for my own reasons. Now, let me zoom out a little bit. This play expires on January, what was it? January 16th, 2026, right? So January 16th, 2026. So if we go from here to January 2026, oh, it's not gonna, it doesn't, oh, yeah, it does. Cool. The market does go out that far. Perfect. And boom. And then let's go down to 15. There. So a lot of people are visual, right? So that's why I did this. So let me explain to you with visual cues on how you make money. So if you see from here to here, which is $15, it's about 33%. All right, and it's 621 days away. I will make money on this play if in the between now and the next 621 days, if Palantir does this, I make 100% of the money I told you about. If Palantir does this, just go sideways, I make 100% of the money I told you about. And even if Palantir does this and closes above $15 on expiration day, I still make 100% of my $7,500. I make $7,500 in all of those scenarios, right? Now, how do I lose money? Well, I lose money if Palantir does this. If it closes below this line, right, on this date, I lose money. Now, there's one more thing I want to talk about, and then I'm going to go to the comments, and then you guys can ask me questions, right? And anything related, Palantir or this play related. There is one more thing that a lot of people don't know or realize, and this is one of the greatest things I love about options, right? So let's do a what if, right? So here's the what if. Okay, what if Palantir on expiration day closes at $9? You know, what can I do? Well, let me tell you. So you notice that I have I am the seller of 50 contracts right, at a $15 strike, and I am the buyer of 50 contracts at a $10 strike. So intrinsic value tells me that I know exactly how much those puts that I bought at the $10 strike will be worth on expiration day if indeed Palantir was at 9, right? So they would be worth exactly $1 per share, right? So $1 per share is $100, and then there's 50 contracts times 50, right? So I will be able to sell just this, right, for $5,000, and I'm going to call that a profit for a reason. So now in your mind, I want to say, okay, you have $5,000, Gabe, but what about the $15 puts that you sold? Because the definition of selling puts is you have the obligation to buy shares at the strike price. Well, let me explain. These now we don't look at them as a spread. Now we look at them as what they were for. So this paid me $2.40. Okay, so let me get an Excel file. Okay, this was something else. Okay, so I'll minimize this so we see it all. Right. Okay, so if I have 50 contracts and I receive $2.40 per share, okay, and 50 contracts, that's $2.40, right? And the strike is 15. That means that that would equal 15 minus my my premium received. That means I will be the owner of shares at $12.60, right? Well, you might be saying, well, Gabe, you need a lot of money. Yes, you can only do this thing with options if you have the capital to convert it, right? But there's no need to take a loss, and I'm explaining why. So if you have the capital to convert it, now we have to multiply $12.60 times 50 contracts, right? So 50 contracts and times 100 shares, because there's 100 shares per contract, is 5,000 shares. So 5,000 times 12.6 equals $63,000. So you would need $63,000 in order to secure this, right? But you don't really need $63,000 because you did collect $5,000 down here. So then you subtract $5,000. And so you need $58,000. And now you will be the proud owner of Palantir shares with a cost basis of less than $12.60, because you have to average in the $5,000 that you got from the 50 contracts, because you turn this spread into I call it a hybrid, right? It's a hybrid losing position that you basically turn the option into shares, and that way you can go now long, right? And that's why you should only do this strategy with stocks that you love. So if it goes against you and you have the capital to do it, you can do things like that. So basically, people, what I'm trying to convey is that if this play goes against me, I do not have to lose 17,500. I can simply do what I just told you and turn these into what's called a cash secured put, and now be the proud owner of Palantir with a cost basis of less than $12.60. So I know that was a lot, but I was really excited about this play, and now that I do this full time, I wanted to make a video about it. So with that said, now I'm going to go to the comments, and you guys can ask me while I'm reading comments. Go ahead and ask me anything you like. And congratulations, Glitch Life, on making your money back. How you doing, Paul? Oh, hey, Steven from Reddit. Hi. Good. I hope this is illuminating a little bit for you. Yes. Okay, so you have a question. You said, I'm wondering about the fib retrace and what you expect is the most likely move here before and into earnings at the end of the C wave? Right. So good question. So let's look at the technicals of Palantir. Okay, so these are this is this is the Palantir chart, right? And as you can see, we have what is it? 24th of May. 24th of May, we have earnings. Sorry, my camera's right in front, so it blocks the bottom of the screen. I have to like peek around it. Okay, so as you can see, this is the Head and Shoulders, right? And the fib retracement that I have, I picked the lowest point, right? The absolute lowest point in Palantir was right here at 570 something. So that is where that's the basically the zero line, and then at the top is the other marker, and then I did the fib retracement, right? So as I said, I think you were a little late. Is that the three most popular reversal levels, right, are 38.2, 50, and 61.8. Now, a Head and Shoulders is not 100%, but it is at the neckline. So I said, okay, I'm going to start a position. That's why I only did 25%, and it's way out. I have so much time, so much time. I believe that the most likely scenario for, and I'm going to be conservative here, I really want to say the most likely is 38, but to err on the side of conservatism, I'm not going to say this 50. I'm going to say this trend line, right? So I believe that Palantir will go down to around 1750 or so, right? And then that is my next buying area, actually, is 1750, this trend line. Well, this trend line, wherever it is, whenever it happens, is my buying. So if it happens all the way over here, my buying would be 1786. But I'm not buying. I'm just adding more of this exact same play. Now, what is possible, right, is it can go retrace down to the 78.6, but that is very rare. I do not think that this gap right here, I do not think that this gap will be filled, right? But if it starts to break the $20 mark, basically, well, then I will start expecting this gap to be filled, and then I expect the gap fill to be the bottom, right? So the bottom, the absolute bottom, in my opinion, and I am not Nostradamus, so I can be wrong, guys, is $17.68. So $17.68 is what I believe to be the absolute bottom. As a matter of fact, I will go ahead and label it as such, so I can put, you know, my words where I say my absolute bottom. In my opinion, I'm not Nostradamus, so you can't hold me to it. But that is my opinion. So now that we know that that's the absolute bottom, listen, that's why I really think this play is great, right? Because I am not saying we're in the macro environment to start buying shares. We are technically in a bull market, but I am no longer bullish. Since we're on the subject, I believe, you know, this is the QQQ, the thing I trade every single day. Well, actually the NDX, but as you can see, 1, 2, 3, 4, 5, 6, 7 days now have passed where we have closed under this rising wedge. We're a rising wedge within a rising wedge. We closed 7 days under it. I mean, look, even the charting tells you the targets, right? Everything is saying we're going down. And if I add Elliott wave theory to it, which this is a great thing, even it is saying that the fifth wave is complete, and we are going down to one of these levels. Now, I understand that I have to manually check these because they're not always on points, and sometimes they repaint. But in the case of QQQ, I do believe that it is accurate. So all in all, I hope that answered your question, man. I think that Palantir is an overall winner. And the way to play it is to bet on it not falling a certain amount, right? That's what this play does. This play says, you know what, market? I bet you that Palantir will not go to $15 on expiration day. And then if you're right, you make money. And if you're wrong, you can still not lose money. If you have enough capital, you can turn it into a cash secured put, as I showed you, right? Options are the cheat code of the market. You just have to understand it. I've been doing this a long time. So I hope that answered your question, but great question. Hey, a glitch. No, I'm not going to do a general one. I do my market recaps on Saturday. Yeah. Yes, I'm glad you like the room for error. I'm telling you, that's what makes it great. Is that from this level, Palantir has to fall 33%. So anyway, everyone, it's been 26 minutes. My goals are not to make like long, drawn out videos. If there's any more questions, I'll be happy to answer them. But if that's it, then that'll conclude this video. And I'm gonna go ahead and throw in a plug for myself while I wait for more questions to come. If you want to actually learn options to a degree that I know them, I do consider myself an expert. Consider my Patreon. If you don't want to do that, you don't have to. Look at my videos. There is I used to charge for this 2-hour live session, right? And I went ahead and just recorded it and put it out for everyone. It's free. If you are new to options, check it out. It's on my YouTube channel. I'll put the link after this. I'll edit so the link comes up, and I'll put it in the description. Check out this 2-hour fundamental on options. I think it'll really explain options better than I'm just going to go ahead and say it, than anything else out there on YouTube, right? Because I break it down to really, really plain, easy to understand way. No, glitch. I am not doing a video on Elliott Wave. Elliott Wave is hard. Glitch Life. It's hard. I'm not a master at it. But if you send me a DM on Discord, I'll send you a study guide for it for free. Glitch. Send me a DM. Okay. Yeah. Anyway, if there's no more questions, everyone, that concludes this video. If if you've been here the whole time, I really appreciate it. Thank you very, very much. Help the algorithm, like, subscribe, all that jazz. Anyway, with that said, everyone, I'm going to go ahead and call it a night. You guys have a good one. Bye-bye.